All right, so we're going to go ahead and get started and not drag this out. This is going to be one of those events where, um, I had on Thursday we had an event where I kind of wanted to give a long background and a lot of information about why it is that what we do works so well. I'm going to pretty much skip most of that today and get right into the nuts and bolts of how we trade it and the indicators that we use to trade it. Okay, so let me go through the disclaimer here, or the disclosure that we are obligated to tell you that um, trading is risky, that a lot of people lose a lot of money in trading, and that you need to be very careful. Okay, so basically that's what all of that says. All right, so I'm going to go right into the indicators, and then we're going to show you those indicators on a chart. Okay, and we're going to show you on a chart that we showed on Thursday so that you can understand better the logic behind what we're doing and why the indicators work so well. So we use several different styles of trading, right? Or several different styles of technical analysis to help us with making good and fast trade decisions. First of all, for those of you that don't know, we trade very quickly. We trade pullbacks from a short-term trend. Every trend's got several trends inside of it until you get to the very fast trends. And we find that our best advantage is on these very fast trends. And I'll talk about that a little bit more in a few minutes. But we use lots of different technical analysis as confluence to make these really high quality decisions where we have all of this data that is collected from different sources, but they're all in agreement that there's a high probability of something happening. And for us, that something is a pullback from the short-term trend, and or that pullback could actually be a reversal. So it's a real good place to pick tops and bottoms. A lot of people use our entire system, but flip it around and do the opposite with it. Because it's so good at picking up pullbacks and reversals, they may use our system. This is not how we trade it, and this is not what I'm going to be showing you today, but it also can be used very well for people that like to get into these longer trends and want to scale out of these trends at certain points. So they use our system to help them scale out because we're so adept at picking up the pullbacks. Or you could also call them retracements. Okay, so we've got several order flow indicators that we use. The speed tick was the first one. If you were in our event on Thursday, you see how I've used this same slide. So you see that we've got an area where price is channeling, and then we've got a hard push up. Okay, so what we're looking for is during this hard push up, we're looking for orders that are being generated so fast, not orders, but transactions that are being transacted so fast that it's highly unlikely that us little retail traders are technically able to do it. We don't have the hardware or the money, the size accounts to move the market and run transactions through the exchange that fast. So this is what we're looking for. You'll see a speed tick. It's this little arrow right here, and I'll show you more about each of these indicators in a few minutes. So it's very important that we see that the big boys are manipulating the markets with their big, powerful computers, and their ability to uh, manipulate is important because they're doing it for a particular reason. They want to cause a reaction. That's what we trade. We trade the reaction. Okay, so that's the first indicator, and that's our speed tick indicator. And this is what it looks like on a chart. Okay, typically you're going to see these at hard, when you see a hard push. Okay, hard push one way or the other. Now the speed tick is generated by this histogram down here. Okay, so this histogram, it comes with the speed tick. We don't trade with it on the chart because we really don't need it on the chart. It just takes up space. But what we have these threshold levels that we've determined are a good place to feel that this level. Okay, first of all, this is like a speedometer, right? And so this is very typical speed of orders being processed. We can expect that a lot of those orders in this area are probably generated by us retail traders, or being very slowly generated by the big boys during accumulation or distribution phases, which we'll talk about real quick in a few minutes. So this is really what's most typical speed of orders being processed. When those orders are being processed much, much faster than this typical speed, this is when we jump into these threshold areas that say, wait a minute, that's way too fast for us retail traders. Something has to be going on here. And that's what we print on the chart. Okay, so this is a great big heads up. Remember I talked about heads up on Thursday. We also have, when I was doing the indicator for the speed tick, I also noticed something else, and that was that the ricochet indicator needed to be created, because sometimes the speed of the orders being processed didn't quite reach a threshold, but it was still dramatically higher than the previous bars on the histogram. Kind of like a dragster, okay, going from 0 to 100 miles an hour. I noticed that even though sometimes that it didn't reach the threshold, we still got a pullback. So this was kind of a hindsight type of thing. So this is a great indicator to add for confluence of orders that are being, or I say orders because most of us think of them as orders, but they're transactions. Orders are something you place waiting for something to happen, right? When you place an order on Amazon, you maybe haven't completed the transaction yet. Between the buyer and the seller, you're waiting for your credit card to clear or whatever. And so the transaction's not completed yet, and the exchange hasn't been made. That's an order, and a lot of us use order flow thinking about of transactions, but it's actually transaction flow that we're measuring, because a lot of games can be played with orders. They can be put on and taken off, but with transactions, they happened. Yes, these horizontal lines are our threshold levels. Okay, that's the levels that are set for the speed tick indicator. And so you'll notice that at this level, this prints a white speed tick. If we hit the second level, it's going to hit a medium blue. We call this a medium blue. So it's double. This second level is double the first level, threshold level. And then when we hit this third threshold level, that's when we start to actually back away, because the orders being processed are coming through so much faster than we would normally expect that there very well may be something else going on, like a news event. We'll see a lot of these great big blue, and I'll show you that in a few minutes. We see a lot of these third threshold level speed ticks during the open of the equities, because things are get kind of wacky for the first 10 minutes of the open of the equities. So we'll see a lot of that. We won't even trade those. So these are threshold levels that are inside this histogram. But again, we don't trade with these with this on the chart. This is actually just to show you what it is that's actually generating these signals. All right, then we have the pullback alert. The pullback, you note it on Thursday. I talked about climactic bars and climactic volume. Okay, this is where we're looking at climactic volume, but not just the fact that it's climactic. Okay, that is important, but more important to us is what type of volume is coming into these bars. Okay, and when we get the right type of volume, then we're going to generate one of these dots at the exact moment that we pick up the type of volume that we're looking for. Okay, so here on the bottom, we've got two identical candlesticks, right? If you're just looking at a static chart and you see two identical candlesticks, like this one and this one, you really have no idea how that bar was formed. You have 4 points of information about that bar, and that's it. You have the high, the low, the open, and the high, the low, which is also the open, and the close. That's all you know about this. So we don't know anything about the volume that happened inside. How did that bar get built? So it's very typical to see, like on the left, price goes up and then it pulls back and nothing very specific happened. Nothing in this bar, nothing about the way this bar was built gives us any reason to believe that the buyers and sellers are at odds with each other. This is a very typical bar. Conversely, if you look at this other bar, how we get into a certain point in the bar where we can actually see from the volume, the buying and selling volume is what we're looking at, just not the total overall bar volume, which is what we're looking at with climactic volume. We're just looking at the overall volume. With our pullback alert, we're looking at a high volume, but we're more specifically looking at what area of the bar did the buyers and sellers kind of get into a fight with each other. Okay, so here on this side you can see, you see my mouse? Oops, I'm sorry. So on this side you can see that the buyers were well in charge. And then we got to a point where the sellers were sitting and waiting. So it created this churning action. That's what we're looking for. Okay? That the buyers are getting exhausted and the sellers are just sitting there waiting. Okay? Very important. So these are our order flow indicators. Okay? Now we also have some divergence indicator. Okay? So this is what we want to see right after some strong order flow. We want to see divergence. Okay? And for those of you that don't know, Divergence is when price and momentum get out of sync with each other. The interesting thing about that is that when they get out of sync with each other, price will almost always follow momentum. All right. Now, divergence is probably one of the best technical indicators in the market and one of the least used. And that's because it's typically very difficult to see and to understand when it's happening, and people get confused about why it's happening, and they want to know, well, is this hidden divergence? Is this, um, positive divergence, negative, all these different types of divergences that, yes, they do exist, but the actual fact of the matter is it doesn't matter what type of divergence it is. What matters is that price will almost always follow momentum when they get out of sync with each other. So we've made it really easy. We've got several indicators. These were the first two. The flash, which is the lightning bolt, is our very first divergence indicator, and it was divergence of price from the relative strength index, the RSI. When we came up with this algorithm, it really started to change the way we traded in the room. Okay, we really started nailing some good trades. So much so that I thought, I'm going to test some other momentum oscillators with this same algorithm. Now, this is probably a couple of years after the flash, because we were so content with the flash. But I started thinking, well, I wonder if there are other areas of divergence that we're missing. So let me go look at some others. And the MACD was the one that really stood out to me, that we were able to pick up some really good divergences using the MACD. So we ended up using the MACD, and that's this diamond. Okay, so we had two divergence indicators. Okay, so now we're just killing it. And I thought, okay, well, how many others are we missing? There are lots of momentum oscillators. Let's apply that to seven total momentum oscillators. And that's where we came up with the Super D. Super D is actually looking at 7 different potential areas of divergence. And we'll print that on the open of each bar, and it prints right here below the bar. It'll tell you how many. And then down at the bottom, it'll tell you which momentum oscillators generated the divergence signal. So these are combined with our order flow in order to start to look at potential trade setups. But we can't do anything without momentum and exhaustion. The reason we want to measure momentum is because exhaustion is imminent when we have really strong momentum. We never, ever, and never will see price move in only one direction for an extended period of time. If you've ever looked at a trend on a chart, you know that price moves up, pulls back a little bit, and then the trend continues, pulls back a little bit, trend continues. For those of us that have trend traded or trend traders now, we know the pain of every pullback or every retracement. That pain is fear, because we don't know if this is just a pullback, is it just a retracement, or is this a reversal and I'm about to get screwed. Okay, so that's a very tough thing for a lot of people to endure. So what I decided to do, I'm not going to endure that anymore. I'm going to look forward to it. I'm not going to trade the trend. I'm going to trade those pullbacks that I'm so afraid of as a trend trader. So the first thing we want to do is see if price becomes overbought or oversold. and again, you're using a momentum oscillator. Overbought or oversold is when the buyers and sellers start to become exhausted. And we, again, for our OBOS indicator, we call it OBOS, overbought, oversold. For that indicator, we in the trade room like to use the RSI again, the relative strength index, but there are several other momentum indicators in there that you can apply OBOS to generate overbought or oversold signals right where your eyes are, right where you're looking. Nothing else to look at. We took the momentum oscillator that's typically on the bottom of a chart, and we took it off and we put it up here, and we paint the outline of these candlesticks and tell you that we're overbought or oversold. All right, so again, we've got potential for exhaustion. That's what it's telling us. I don't look at anything as it relates to a trade setup unless I have a strong potential for exhaustion, which is why I'm constantly measuring momentum. Okay, so we have our MoMeter indicator. Our MoMeter indicator tells us when we have exceptionally strong momentum, and the bars will change colors. Now this is user definable, but in the trade room, when we have strong momentum, I have the bars go from a black color to a lighter gray to an almost white color. And the lighter the bars get, the more imminent the exhaustion. Okay, so this is our MoMeter indicator. When you see this and you start seeing these lighter bars, you can just know that price is about to pull back some. Okay, we have our velocity indicator that we don't typically use in making trade decisions as it relates to part of our trade plan, but it's a great confluence indicator to let you know that price is moving a lot inside of a bar. Okay, so it may be jumping back and forth between two prices, but it's doing it a lot. And so the price actually has a lot of velocity in it. And when you get that type of velocity, then exhaustion is imminent. Okay. Now on the right side, we have on this, we have our zone, our naked rockstar zone, okay, our NRS zone. When price is traveling inside this zone, it's really not the best time because things are kind of channeling. When it breaks outside the zone, that's when we're looking for a exhaustion to set in. Okay, that's when we're looking for the pullback or the retracement. All right, now support and resistance is one of those things that you can't trade without because everybody else is looking at it. All right. Areas of strong support and resistance are going to cause price to pause, pull back, retrace before it either reverses or continues on. So if everybody else is looking at support and resistance, then we feel like we better be looking at it too. In fact, we use that as a defensive posture when we enter our trades. Okay, not all of our trades, but most of our trades, and I'll go over that in a few minutes. So we have an indicator called the FT reset, or first touch reset, which was the name of my very first pullback trade. Was called the first touch trade, and it was the first touch of these major areas of support or resistance. For these major areas, I use what most people use, and that is floor trader pivots. This has been an area of supported resistance that people have looked at for years, and You know, only reason support and resistance works is because people believe it does. That's the only thing that causes price to stop and turn in certain areas. Uh, that you can just see it on your chart sometimes, and you can see resistance to price crossing through a level, and that's because people believe that there's resistance there. That's the only thing that gives these lines any value at all, is the belief in those lines, right there. So they're self-fulfilling prophecies. So we absolutely use support and resistance in our technical analysis. Now we have an indicator that's a composite of three of our best indicators. Okay, this is our Rockstar indicator. This is relatively new within the last year. And essentially this indicator came to life because a lot of people were, I don't know, they weren't really struggling with our setups, but they weren't as clear as they could have been maybe. People were missing certain setups when they really shouldn't have. So what I did is I combined three indicators to generate a single signal. All right, so what we used to trade looked like this, with a speed tick, overbought, and divergence, and the order would be on the open of this bar or better, which would be up in here maybe, and that we would short it here. Okay, so this to me was really simple, but people were still missing it for whatever reason. So I combined them and created the Rockstar. So at the open of this bar, it prints the Rockstar. All right, so this is several indicators in one. The Rockstar has these indicators inside of it, but does not print the indicators on the chart. It only prints the Rockstar. We still have all of these indicators on our chart, and we include the Rockstar so that we get a heads up that something might be happening here. I'm going to wait for the open of this bar with my finger on the trigger, ready to put on a trade as soon as I see the Rockstar. So it does help with very quick decisions. Trade setups have a very high probability of working out and being winning trades, but the flip side of that very high probability is that it does take a bit of skill to get your trades placed. Okay, I just created a series of videos. I got 4 videos on placing trades on the Static Superdome, for NinjaTrader Static Superdome, and as part of our Einstein package, some of the education, that we have some educational stuff for our Einstein members, and so all of that is in there. It's called our Fast Forward program. Okay, so this is going to be a cheat sheet that I'm going to give you guys to use as we go through the trade setups. Okay, I'm going to put it on. I'm going to change the projector here in just a second, but this is going to be your cheat sheet so that when you're listening to me and I start talking about indicators or whatever, you can go and you can very quickly see, oh yeah, okay, that was an order flow generator, or oh, that's a divergence indicator. All right, I'm going to go through the setups and the step-by-step qualifying process for a setup. Talk about options for a setup. So we've got 3 setups that we're going to talk about today. Some of the characteristics of what we do. Okay, as I mentioned, we trade the pullbacks or the retracements. We have all of our indicators are what we call our heads-up display indicators, meaning you don't have to look anywhere but on one chart, right where the decision making happens, which was on the open of the next bar or current bar. Okay, on the open of that bar or shortly thereafter. Some people like to pause for a few seconds. That's the only place you have to look. You don't have to look on another monitor. You don't have to look on another chart. You don't have to look at the bottom of your chart. You don't have to look at a time and sales window. You don't have to look at anything else. So we go into a lot of effort to make sure that all of the information you need is right there in front of you. We have very short exposure time in the markets. The longer you're in the markets, the more speculative the trade becomes, because there are people in the markets that are waiting for people like us to just drop our bait in and wait for a big shark to take it. Okay? So the longer you're in a trade, the more speculative that trade becomes. Because of that, we trade for a +5 target, and we set a bracket order of -7, but we will manage that order smaller as the conditions that got us into that trade have changed. So, for example, we will never lengthen a stop. We will never go more than -7. We will go less. Okay, so if the conditions that got us into a trade, right? So we get into a trade, we're expecting price to pull back. So maybe price starts going sideways. Well, then the condition changed, right? It's not doing what we expected. So I'm going to take my stop, which is at -7, and I'm going to try to pull it up to as close to break even as I can. So I may end up taking a stop on the trade of maybe only -2 or 3. So just because we place a bracket order doesn't mean we are no longer, active traders. We have to react to the conditions, the current conditions. All right, we have very clear yes/no signals. You saw the indicators. That indicator says yes, a condition exists, no, a condition doesn't exist. That's it. That's the only thing we need for trading. The problem is so many other trading systems have all of these shades of gray, and we don't do that. That caused me more trouble and more confusion and more problems, not only understanding the trading system, but understanding how to get into a trade, how to manage a trade, how to exit a trade. All of these gray areas, I would always get into a trade and then go, oh, I didn't see that over there. Oh, I wasn't looking at that. Oh, I should have. Now what do I do? So you found out you got into a trade the wrong way, looking at the wrong things, or not looking at the right things. But now you're in a trade, so you think, well, I'm in this trade. I might as well just see what's going to happen, huh? Maybe I'll get lucky. How many of you have ever done that? Well, I shouldn't be in this trade, but I'm in it now, so what the heck? Yeah, we don't have trades like that anymore. The learning curve is much shorter. All right, again, when you have very concise trading rules and signals from the indicators, it takes a lot less time to learn when to enter the trades. Okay, the conditions to enter a trade. Takes a little bit more time to learn how to manage and get good at trade entry. But the good thing about that is we have a program to help you learn how to do that more quickly. Okay, that's why I did those videos. But we have tools and a whole program to teach you how to shorten your learning curve. This creates a much less stressful type of trading. It's certainly passed the test of time. As you see, we're at 10 years now, and we're still doing the same thing. We're not one of those trade rooms or companies that continually changes things. I went through so many of those rooms when I was a struggling trader, where they just kept, every time I logged in, it seemed like there was something new, something changed, some new information we didn't have before. And it does occur to you after a while, well, if it was so good when I joined, why is it so different now? Okay, so we've done nothing but this for the last 10 years, and we've done it every day in a trade room that we have, where we have a group of the best traders in the world, nicest people, easy to get along with, it's a laid-back environment. It's a one-shot deal. You own the license for the indicators. This is not we don't hit you with these monthly fees or yearly fees or anything like that. You buy it once and you're done. So we also have the education and mentoring program. So those are some characteristics of what we do. And now we're going to shift gears, and I'm going to show you how. So let me jump over to this other screen real quick. All right, everybody got that? Everybody can see this new screen? All right, good. All right. Well, for those of you that were with us on Thursday, you remember this. I'll go over it with you very quickly because it is very important, and this is a big part of why we do what we do. Okay, so this goes into when you understand the logic behind what we do. It makes it a lot easier to relax and work on your consistency because you know the logic is there. Okay, a lot of people never actually get around to working on their consistency because they don't have the confidence or the trust because they don't really understand what's going on, how it works, why it works. Uh, and I don't say that it necessarily is important, but you've got to gain confidence and knowing and understanding the logic certainly helps with that. All right, so we're going to talk quickly about how a group of these market manipulators. Of course, there's a lot of them out there doing different things. And we talked about momentum traders on Thursday and how they do what they do. And it all kind of is combined together and works together as a system where if you go and look at any trading chart, you will see periods of time, as long as it's a liquid market, you will see this type of pattern repeated over and over and over again, whether it's on the way up or on the way down. All right. So we have what all of us would call a trend, right? We have this trend, this nice upward trend. Inside this trend, we have trends. There's an upward trend. There's a downtrend. There's an uptrend. There's a downtrend. All right. So inside every trend, there's another trend and another trend. Okay. So we want to trade these very quick trends. These quick trends give us a heads up on these pullbacks. Okay. So what we're seeing here is what the big boys call accumulation phase. When price is down at a very reasonable price for whatever this instrument is, it's a good time for the big boys to start quietly buying up as many of these assets as they can, as many of these contracts. We're going to say contracts because we trade futures in our trade room, although this applies to any instrument, stocks, futures, forex, equities, whatever you're trading. This applies as long as it's a liquid instrument. So we've got this area of very low interest amongst the retail buyers. The price is just kind of languishing. It's kind of moving sideways. And to us retail traders, we don't really run a trade in this. This is something to be avoided no matter what type of trading system you're in. So the market makers are in there quietly buying this stuff up. Well, why are they doing it quietly? Well, because they know they're being watched. And you see these guys on Thursday, you see the ticker tape. That's people watching what the big boys are doing so that we can try to get a heads up on what they're doing and beat them to the punch or go along with them. Well, they don't really want that. So they're going to try to hide from us, but still trade within the rules and regulations of the exchanges. So they do this very quietly on very low volume. And then there's a period, a markup period we talked about on Thursday. And then we get into this area where we might be doing another accumulation, or they call it reaccumulation. Then we get into another markup phase. And then they start selling everything that they bought down in here. They start selling up in here. So then they make their profits, but they are still holding. And this is where the Wyckoff uh, price price wave came into effect. All right, so this is, you'll notice there's this wave here, but what's being left out is the ability of these traders now to really push price electronically with these HFTs that you hear so much about, the quants, the hedge funds that have this ability to move the markets at their whim. All right, that wasn't they weren't able to do that back in Wyckoff's days, back in the turn of the 20th century. So that kind of got left off of this Wyckoff wave, um, but it's very prevalent these days. So we come up here, we get all this distribution. Well, this stuff they bought down here, this is where they make their money. But they're still holding the majority of the contracts. And what they want to do now is set up the markets to do this again. All right, so they don't want price to keep going higher. They want price to turn over, drop, so it can get down here and they can start this whole process over again. So again, there's a markup phase. So remember, the momentum buyers see this breakout, and so they jump in on the breakout, and then they sell up in here. But they sell off all their assets up in here while there are still retail buyers hanging around trying to figure out what to do, and then jumping in because they see price jumping up here, and so they get fear of being left out. So retail buyers start jumping in right as the demand for this instrument is gone. And when demand has diminished, what happens to price? It drops, right? It's all about supply and demand. So this is very important. This whole pattern is very important to how we trade. And I'm going to show you how we take advantage of that. Any questions so far? Any comments? Questions? Comments? You're all very quiet today. This must be fascinating information because you're so quiet. I think it's fascinating because it works so well. All right, so let's look at this. And I'll go over now, and here's your cheat sheet. Okay, so you already saw your cheat sheet. So that you can refer back to this and ask me questions off the cheat sheet if you want to. Okay, so we're going to talk about this trade setup. So we're going to talk about the Rockstar setup. And we're going to look for the very first thing. Now, we will trade all of these. See, this one, the way it was on the last slide, you saw a big drop, which could look like a reversal. But if we have the opportunity, we'll trade every time it does this. Even though it just pulls back, shadows, and then takes off again, we're in and out of these trades in just a few seconds. I mean, if a trade lasts for 3 minutes for us, that's a really long trade. We are very often in and out of trades on the same bar we entered on. We exit the trade very often. One sec. I had a reminder pop up. All right, so first of all, I told you that our very first pullback trade setup was called the FT, or the first touch. We're not going to talk about that one. It was what got me on to trading these pullbacks. I noticed that when price approached that support and resistance, that the floor trader pivots, with price had been and approached the floor trader pivots, and it hadn't been in that area for at least a couple of hours, or if at all, and price approached that line like this and slammed into it, it was very common to see it pull back a little bit. I still trade this, and I do teach it to people in the trade room, but I really don't expect people to trade it, because it does take a good bit more finesse than the other setups. And that's why I came up with the other setups, so that these pullback trades would be easier for people to start trading. So I'm going to start backwards. Our most recent setup, we call it the Rockstar. And it is really easy to see and trade. So we're going to start with that one. Now, the very first thing that we need to qualify a trade, or at least to get our attention, is this area of consolidation. Okay, this channeling. Right, we have these channels where price really isn't moving very hard. So what we want to see is a break from that channel. Okay, so we've got a channel here, and then price breaks. Okay, this is going to be the first thing that gets my attention when I'm just sitting and staring at charts. That price is breaking out of the channel. We have this indicator called our NRS zone. I showed you that on the video. It just has these two. Just has these two arrows, but we added this little semi-opaque zone to make it easier to see. So when price is channeling, you'll see that it's trading inside this NRS zone. When it breaks out of this zone is when I start paying attention. Okay, nobody wants to trade in this, but I want to see it break out of this zone. The next thing that I'm looking for is our momentum indicator to tell me that momentum is beginning to set in. Okay? So we're going to start seeing, remember, we're going to start seeing different shades. Why is it doing that? All right, we're going to start seeing that the bars are changing colors from a dark color to almost white. The lighter the bars, the more eminent the exhaustion. Okay? So now we've broken out. We've got some good strong momentum here. Now we're looking for a climax bar. All right, so we want to see, remember, we're not just looking for climactic volume, we're looking for the right kind. Okay, so this is our pullback alert. This says that inside this bar there was a lot of churning activity. Buyers and sellers were really getting after it. And then we're going to see, this is what creates the trigger. Okay, this is what tells me keep an eye on this, and I'll say it in the trade room. I'll say I'm watching, and we'll say this is the CL or something. I'm watching the CL. during the life of this bar. This one hasn't even opened yet. So this bar is being created, and maybe we still have 20, 30 seconds to go, and I say, okay, I'm watching the CL. But at this point, it's not really a trade setup for me. Not yet. Even if it opened on the open of the next bar, this is not quite a trade setup for me. Next thing I want to see is that price has become overbought. So we're going to add a, whoops, no, I don't want to do that. That was the wrong one. We're going to show right on the bar that according to the RSI, price has become overbought. Another exhaustion potential. Now, got one more thing. Where the heck is that line? I thought I had a support and resistance line here. I'll make one. All right, we're going to use that line for our support and resistance. So what we want to see now, whoops, is that price has hit an area of resistance with all of this confluence. And we want to see that price has reacted to this line. Now, it can certainly go across and test that resistance, but ultimately it comes back and closes below that line. Okay, this is telling us this bar has value, or this line has value to the traders that are trading right in here. The next bar opens, and we get a gold rock star. Okay, and it's gold. Excuse me. It's gold because it opened outside of this zone. All right. If this bar opened inside this zone, it would be black. Okay. I'll tell you more about that in a few minutes. So at this time, on the open of this bar, I'm going to short this. And for those of you that have been trading this for a while, what typically happens? If you can, if price opens, absolutely. For those of you that have been trading with us for a little while now, what's the percentage chance that you've experienced on a setup that looks like this? What's the chances of price pulling back here at least 5 ticks? Yeah, I get between 80 and 90% is what is reported to me. Okay, I don't make, and I'm not actually allowed to make any claims as it relates to my relationship with NinjaTrader. They don't really want us making any claims. Only, only that, here's a system and you be the judge. Okay, but I can certainly ask people that trade our system to tell you what they experience. We have a lot of references. So if you want to talk to one of our traders, feel free to let Connor know, and he'll get you lots of people to talk to. So at the open of this bar, this is where the trade gets placed. Now, there are rules. Certain people, certain traders create rules that they say, you know what, I'm going to wait a few seconds and see if we get some of this, what we call freight trading effect, where the retail buyers are still not convinced that the whole thing is over, and they keep trying to push price up, push price up. That's also a good time to enter this trade when price is up in here, because we're shorting, right? So if price opens and jumps up, heck yeah, I'm going to take this trade here. By the way, I do turn off all sounds on my platform because I find them annoying. So I don't hear any of those, but I know what you mean. All right, so this is where we're going to enter this trade. And this is a Rockstar trade setup. And it's going to probably end up looking like that. All right, that's very, very typical trade setup for us. And even more typical, we're going to be out on this bar. In, out, done, put the money in the bank and sit and wait for the next one. We just call it waiting on the bus because there's really not a lot of analysis going on, personal analysis. We're not trying to figure anything out. We're not trying to outthink the markets. We're not doing any of that. We put as much effort into our trading as we put into sitting at a bus stop and wait for a bus to show up. Because our trades just set up, and they're there or they're not. And that's it. So it's a really, really simple. And the more you do it, no, I'm sorry, Barb. If I said it must be inside, a rock star, a naked rock star, must be. And I haven't gotten to the naked rock star yet. You can trade a rock star inside a zone if it qualifies like this. Okay. So if it opened and it qualified just like this, shoot, got everything in the back. This would still be considered a qualified rockstar trade because, and even though it's inside the zone here, although this particular example, it wouldn't happen because of how hard price moved here. But if price were, not moving quite so hard, and maybe it was on this bar and it was still inside the zone, I would trade this as a rockstar setup because all of these conditions exist. Remember what this is called. This is called the naked rockstar zone. I will not take what we call a naked rockstar, and I'll turn this into a naked rockstar right here. That is a naked Rockstar trade. And it's naked because there's no support or resistance behind the trade. Now, I didn't trade these for the longest time because my rule, I have had a rule for many years. And the rule was don't take a trade if you don't have a safety net behind you. Safety net is major areas of support or resistance. Problem with that was once we came up with this Rockstar trade setup, holy cow, it didn't care whether there was support or resistance behind it or not. It just wins and wins and wins. So I had to create a new setup called the Naked Rockstar. Okay, so for a Rockstar trade, I actually included a couple of things that are optional for a Rockstar setup. The Obos for a straight Rockstar setup is optional. The pullback alert for a straight Rockstar setup is optional. You could still trade this as a Rockstar trade. Okay, as long as you have the resistance behind it, you can still trade that as a Rockstar. Personally, I prefer to have Obos and a pullback alert. Okay, you could trade it like this. Doesn't matter. Now, if I remove this, this becomes a naked Rockstar trade. This no longer qualifies because the resistance is gone. So I'm going to require now that I have Obos and or a pullback alert. Certainly prefer both. My personal trade plan says I only need one or the other. I know other people have trade plans that say gotta have both or I'm not taking this naked Rockstar. Okay, so I added the confluence, the requirement of the Obos and the pullback alert confluence. If this were up here and this were black, not trading it. I don't care about this other confluence. It's inside this zone. I can never take a naked Rockstar trade inside this zone ever, ever, ever. I can take Rockstar trades. Now it's a Rockstar trade, and I can take it. If this is there, I don't take it. Okay? This is all on recording. You can now review this so you get it, so it's very clear. Okay? Anybody have any questions? No questions. No confusion. Everybody's good. So we've covered now the Rockstar, the naked Rockstar, the optional indicators. Now we're going to talk about the speed tick. Okay, so you see how I'm working backwards, and we're basically removing some levels of confluence or changing the levels of confluence to create a trade setup. Now, before there was a Rockstar, we had the speed tick. And I traded the speed tick, just the speed tick, for a long time before we ever had a Rockstar, before we even had divergence signals. All right, so no divergence is required. I still have to have strong momentum. I require having of course, that we're going to have the breakout. I require oboes. I require that we have this major upthrust bar that was much bigger than the previous bars. We got a speed tick, right? And this bar has to open below the resistance 5 ticks or less below this resistance to place a trade. So at the open of this bar, make it a little easier to see. I don't want it on the line. It's got to be below this resistance 5 ticks or less. All right? Any questions on that? Now, the reason that practice works so well is you can look at trading charts and you can go practice variations of this. This is, of course, a kind of a composite of a number of different scenarios, but you see this all the time, but not exactly like this. Yes, Philip, they're the same for Forex. You might tune them a bit. I'm not a Forex trader. I know we do have a lot of Forex traders that use our indicators, and I haven't heard from them that they do a lot of changing. It all depends on which one and how it moves. If you get an instrument that regularly, see, I'm judging by futures, and I've studied futures, and I can, with a 80-90% probability, we're going to get a 5-tick move when it moves. It doesn't always move. Sometimes it just keeps going. And that's from studying how price moves and where the highest probability is. So you're going to look at your instruments that you decide to trade with this, and you're going to just go and study this pattern and see how many ticks or pips does it typically pull back. And say it's 10, you may want to shorten that and say you want to go for 7 or 8. Okay? That'll take a little bit of study on your part, only because I haven't done the study, because I'm not a Forex trader. I'm hoping that Forex traders start seeing the beauty of getting away from Forex and trading these micro futures. I don't trade Forex because I don't really believe in that market that's being jacked by your broker. So the spreads are just kind of ridiculous to me. So I don't trade it. I much prefer a regulated markets like futures. And so hopefully, I think the micro contracts are intended to bring over the Forex traders that are tired of being taken advantage of. Any other questions? We have a lot more training videos available for you also. All right, no more question. I got one more slide for you. So let me I don't have that on this computer. You could send us an email, and Connor can get you something. All right, so we've got some specials for you that are going to end on this coming Wednesday, and here's a link to these specials. We've got a lot of the Rockstar indicator, but typically they're going to buy a package. Remember, I told you the Rockstar will give you the signal, but the packages, and we have a number of other packages. This is just the one that we have on special right now. The packages are going to give you the heads up that something is likely to be happening, or to give you a heads up that the Rockstars, if you get a Rockstar, it's a good place to take a trade. Then we've got the Einstein bundle, and that's everything we have to offer, and we're continually adding to that bundle. We have a peer mentoring program that we're going to be releasing soon. I know I've been saying that for a little while, but I did have some other projects I had to finish first. We have a group mentoring every Wednesday. We have our fast forward training program, which teaches you how to manage your domes and your trading domes, and how to work at and practice your trading and practice the skill of managing trades. So we teach you how to do all of that. It comes with all of our indicators that we have now and any indicator that we develop in the future. You already get it for free. All right, and then we also have another app called the Essential Add-on Suite. It has a bunch of cool tools to use for your NinjaTrader 8 platform. You get the replay data downloader where you can download multiple instruments at a time. Anything we can think of, we throw it into the Einstein bundle. Priority tech support. You know, if you have any problems, I'll just come right on your computer and fix them up for you. You'd think after 10 years, I probably have a pretty good idea how most of this stuff works. So I can generally work through most problems with you. So that's our specials for this week. Ending on Wednesday. Connor's got another special that he decided on Thursday, after I already had this slide done, that he was going to give the first 5 an additional discount. I don't know what that is. You'll have to ask him. But I guess 2 people took advantage of that on Thursday, so we've got 3 left. So contact Connor at support@theintentionaltrader.com. Type that in there, Connor. Oh, there it is, up higher. Or just go onto our website, and any page on the bottom right-hand corner, there's a little chat box. You can chat us up if we're there. If not, go ahead and send a chat. If we're not there, which is rare, but on weekends sometimes we're not there, it'll send us an email, and we can reply to you that way. All right. Well, thanks for coming, everybody. I hope you had this was informative for you. I hope you see the value in a system like this. If you've got any questions, feel free to ask Connor or me. Just go on to our chat, send us an email, and we'll be happy to answer. Thanks, Barb. All right. Have a great weekend. Bye, everybody.